Yo, what's up guys? It's your boy Looney. Today I want to talk about my 60,000 portfolio and more importantly, what I do differently if I had to start over. In short, it would be less diversification, more risk, and some lessons I learned the hard way. Before we get into this video, I want to give a quick shout out to the Discord. It is free to join, and then I also offer a premium membership, $8 a month, and that gives you access to one-on-one coaching, trade callouts. I have an option selling course, giveaways, and more. You can check it out. All the links to that are in the description. So right now, my portfolio sits at 60,000. I've been investing for a few years now, right about 3 years. I've made some good moves, and I've also made some mistakes. But I've also stayed patient. The biggest thing is just putting more money in and letting time do its thing. That alone would have gotten me much further and faster. So what would I actually change? If I were to start from scratch, I'd be less diversified. So I actually sold off a lot of my positions, but before now I had about 30 different investment stocks and I was a little too over diversified and I was spreading myself too thin, too many random stocks, too many small positions. Instead, if I were to restart, would be to concentrate on more high conviction plays. I'm not saying go all in on one thing, but if you believe in a company or sector long-term, size up, take bigger bets. So I totally agree with this. One of my biggest regrets is not investing into Robinhood. And one of my main reasons was because I use this app and I saw the future of Robinhood and how easy to use it is and just overall its advancements. And I started investing in Robinhood as soon as the market crashed back in April. And again, I probably should have done a little bit more, but at the same time, I didn't want to go all in. But this is one of my biggest regrets is not investing into Robinhood, being that I use the app itself. If I'm bullish on the app, I might as well be bullish on the company and therefore the stock. And if you could see, the stock has soared up 400% in just the past year. And I was really interested into it when it was around that $20 mark, but I was a little hesitant to pull the trigger because I was selling options and I was dealing with opportunity cost issues. But at the same time, I would have made more money if I just simply put it into Robinhood or a stock like this, where instead I was spreading it across different investments like ETFs and bigger stocks, when in actuality, I should have just focused on my gut. Now, the second thing is I would take on more risk. I sort of just kind of talked about it with Robinhood, but when you're young or first starting out, you can afford these losses. Smaller account, you have less to lose and way more time to recover. I would say I played it a little too safe early on. And if I had leaned harder into growth or selling options sooner, my portfolio would have been way bigger today. But at the same time, you can't go back and you have to learn these lessons. But I definitely would have done more risky plays. When I first started, I did all the safe stocks like Apple, all the big names, the Mag 7, Tesla, NVIDIA, all the bigger size names, Microsoft even too. And although these are really good, my thought process was that the market generally goes up on a long period of time. So just being invested in general is beneficial. When in actuality it is, but at the same time, you kind of get those diminishing returns. Your returns aren't as great when the market actually runs, because a lot of the time when the market runs, a lot of these small or mid-cap companies end up running a little bit hotter. And going back, I would have definitely done more risky plays. Now, although I am doing it now, I do have Riot and Mara and SoFi. These are very volatile stocks. Even HIMS I just started into. These are stocks that are very volatile. And what I've learned about myself is I do like that volatility. I like selling options for getting that consistent income and being in control of things, but at the same time, being in control of risky assets, because I want to beat the market. And the way to beat the market is you do have to go a little bit riskier. So a lesson I've learned was, after doing all this, patience pays. Some of my best wins just came from holding and not panicking when things got lucky. And you learn that along the way. You're going to make mistakes. You're going to miss time trades, but every mistake teaches you something. And honestly, that's how you grow into a better investor. And I totally agree with that. When I had a Riot, I had it at $9. And we could see for a long period of time, Riot was actually trading under $9, and it was looking pretty grim. And overall, was a lot of people were thinking about selling off, or just the end of the market, or Riot in general. And I just simply held. I didn't invest anymore, even though I could have. I didn't. I just simply held. I kind of eagered it and over invested, and I invested towards the top back in September, or not September, the beginning of the year, back in February, when it was trading above $10. So my cost base is a little bit higher than I wish it was. Ideally, I'd like it to get lower to $8 or $7 and perhaps keep it there. But instead, I did do a leaps call at $5. So this one I might exercise, get that cost basis down. But definitely patience does pay off, because especially if you're doing stocks like I was just mentioning, which are volatile, there are going to be times where things look rough or grim. And because of that, you have to simply hold or buy the dip and just overall control the situation. Something like HIMS that is massively down in the past month, 30%. And if you have high conviction on this stock, you should have cash on the side as always and be able to buy these dips. And now I've started my position in HIMS, allowing me to get my average cost down. Now HIMS could possibly go down even further, maybe even $20, but I will continue to buy it, and I believe in this company long term. So just to wrap things up, if I had to restart, I would definitely invest more money up front, focus on fewer plays, and take on more risk early. And just overall stay more patient. Simple. Don't overthink it. Just get in the game, learn, and adapt. That's the real secret. Until next time, peace.